Hi, I'm Sandra Spencer and we're going to take a look at the gold mining company Red Rock Resources and its growth in connection with Cedar Financing. We have Brian Cannan, Managing Director from Yorkville Advisors, and Andrew Bell, Chairman of Red Rock Resources. Now, Andrew, the market cap for Red Rock Resources has gone from last week, around 14 million, to over 40 million in less than a week. Now, that's nothing short of spectacular. Can you, let us know, has Cedar Financing had anything to do with the company's growth?
It's actually been an important instrument for us in enabling us to diversify our sources of funding and take opportunities very quickly when they were presented.
Brian, can you explain more about Yorkville Cedar Financing and what you have to offer?
Yes, the Cedar Financing tool is a framework placing agreement where we agree to use our balance sheet to buy new equity in the company at their choosing. And the goal of the Cedar Financing tool is really to raise money at progressively higher prices as the company delivers good performance to the market. I mean, for us, it's really an entry point to a broader financing relationship where we involve our placing, our equity purchases, our loans, and various other facilities that can help the company grow at different stages.
Now, Andrew, why did Red Rock Resources choose Cedar Financing?
First of all, I knew how the instrument worked. I knew how we could use it. And when Brian says that it's a tool, I think he uses exactly the right word. A tool is as good as the person using it. If you have one more tool in your kit bag, then you have more opportunity. And we knew that the Cedar facility, well, after all, it's a facility. When you get it, you don't necessarily draw down on it straight away. You may need to use the money only a month or 2 months or 6 months later, maybe never. But when you do need it, it's there, it's guaranteed, you're sure of it. And if you borrow against it, as after a while we were able to do, it means you can take much bigger purchases on because you know the money's going to be there.
Okay, so you wouldn't rule it out. You would actually enter into another Cedar contract for Red Rock Resources when this current one expires next year, perhaps?
Oh, certainly, provided we can agree on terms and the charges aren't too high.
And in what circumstances, with the current price of gold and cash flow, I mean, potential, would you need Cedar financing or anything like this potentially?
Well, I think that when we come to the end of this year, although we're an exploration company up till now, our model's changed a bit. We're going to be cash flow positive from Colombia, our mining operations there. Our investments, because we sold some of our interests into listed companies, so we have shares there. That's not going to be cash flow negative anymore. So we just have our Kenyan operations to fund, which is going to be easy. So we don't have a funding problem like a lot of exploration companies. What we're going to have is the possibility still that if it works, if say our Colombian model works, we have a cookie cutter, we can take on new projects. We'd like to, but if we see something, we want to be able to know that we have the capital cost and we can make an offer and we can complete. The Cedar facility could be extremely useful.
So going forward, can you comment, Brian, on what Yorkville Advisors could offer?
Yeah, I mean, we look for companies at an early stage that we can become a partner with. And as they grow more successful, like Red Rock is doing, we hope that they'll appreciate our involvement early on and will continue to work with us when there's more sources of capital. And what I hope we can provide is the company moves from needing equity finance to more debt and project finance. We hope we can play a role in providing that type of finance as well.
To close, what are the challenges junior mining companies have to survive and potentially thrive in today's market?
For a lot of them, it's availability of cash, because an exploration company, by its nature, doesn't have cash flow. And when you are exploring for minerals, the gap between when you start exploring and when you finally have production, going through drilling, further drilling, feasibility, construction, can be a long time. Where does your money come from in that period? Probably has to come from the market. So you want as many sources as possible. And that's where the Cedar fits in. In this, I think, the mining sector's similar to some other sectors that you finance.
Yes, it is. For all junior companies, the challenge is to raise money and not give away too much. And I think what we're trying to do maybe is help in that regard. But it still remains a big challenge for companies because junior companies have potentially very high intrinsic value, but often it's not reflected in the market.
Okay, so will Red Rock Resources thrive?
We're going to thrive, others may only survive, but we've passed an important point, and certainly, as we were saying earlier, the Cedar, among other instruments, has helped us get to that.
In our opinion, we don't make predictions about companies, but what I can say is we have confidence in the management and the business model. So if they pass is anything to go by, it does bode well for the future for Red Rock.
Thank you. And you've been watching how Yorkville Advisors has assisted the growth of Red Rock Resources, a gold mining company.